All right, how much weight are you going to put on this retail sales report? We had a guest on earlier. He says, yeah, it's interesting because I want data, but it's kind of backwards looking and it's kind of not really clear how much of a read it gives on today's consumer.
Yeah, that's correct. And I think you're going to get some more data later in the week. Adobe usually comes out with their, Black Friday weekend sales update and some of their Cyber Monday, data points, which are a little bit, more up to date and a little bit better data.
All right. Is there one area in this retail sales report, even though it's a little delayed, obviously, it's the September report, that we should especially be paying attention to, whether it's apparel, autos? Is there one area that's going to give us a kind of a snapshot of the strength of the consumer?
I don't think so. I think, over the next, month and a half or so, you're going to get a better idea. And I think, most of these companies have been able to, offset a lot of the tariffs. So I think you're going to get better than expected results from most of these companies, which has been the case over the past few years. You've had, we're going into the holiday season. Is the consumer okay? You've heard that pretty much over and over again over the last 3 years. And I think, even though you're seeing some bifurcated data with the lower middle income consumer, I think that data is going to be okay.
All right. One of your top picks is Lululemon, a company certainly impacted by tariffs, about weaker consumer demand. It's a high-end brand, though, and we keep on saying that the high-end consumer continues to spend. Why have we seen so much weakness in Lulu, and what do you see leading to the turnaround?
Yeah, I think that Lulu also, kind of caters to some of the middle income consumers. And I do think that overall, some apparel companies have just not done as well. And then the tariff impact has been, a big factor in these valuations. So in recent months, you've seen pretty much the entire apparel and footwear industry, trade down to significantly low valuations. So, a lot of these companies traded half of what they traded at just last year. Lulu trades at 12 to 13 times forward earnings compared to 25 over the past 3 years, which is half. And then you've got, companies like Deckers who's continued to grow, and their valuations, done the exact same thing, pretty much half of what it was last year. And I think that's just because, investors and analysts are really curious to what, the full impact over a full year of tariffs is really going to be. But I think you've seen, early in this quarter and some last quarter, most of these companies are telling you that they're doing okay. There's a small impact for most of these companies, but they're able to offset the tariff impact.
Another one of your picks is On Running. I saw an article yesterday. The headline was, they keep raising prices and people keep buying it, and people don't seem to mind. Why is this company so popular right now? And is this a read on anything else? Is it a read on Nike? Is it a read on Under Armour? I mean, how well this company does in the holiday quarter, what is that going to tell us?
Yeah, so obviously they just came out recently with their numbers. Their stock had a big pop, and I think it's because investors realized that they were able to not only manage tariffs, but their gross margins were up 500 basis points. So they were able to pass on most of those costs to consumers and more. So I think On's obviously a really healthy brand. It's really hot with consumers right now, which is great, and their valuation's cheap relative to the last couple of years. So I think it's one of our top picks. Okay.
You have a pretty wide coverage universe. Is there one name that you're looking at as possibly a bellwether? I'm not saying it has to be one of the biggest companies, but just kind of a read on where the broader consumer is, whether it be high, middle, or lower?
Yeah, actually we're pretty negative on off price just because of valuations here. Obviously they're well positioned in this market. And we think valuations have gotten a little bit out of control. You've got TJX trades at over 30 times forward earnings. And they grow, mid-single digits, which is strong, and they're consistent. They open new stores to get that growth. But we just think valuations are a little frothy here. We really like a company like Hasbro. They're the toy manufacturer, but they've gotten into digital gaming recently. And they do a really good job of, expanding margins in the last couple of quarters through the tariffs. So, the digital gaming, as it becomes a larger portion of total revenues, it carries a much higher margins. We really like that company.